Listen up, wannabe day traders. You want that Lambo, you want those $1 million wins. I get it, but I'm gonna say some things in this video that you might not like. This is part 1 in my TA series. This is gonna be a do's and don'ts, setting expectations type video that you need to watch. If you skip through this video and you're going right on to the next video in this series, you're already starting off wrong. These videos are gonna get more advanced. We're gonna go into strategies, indicators, setting up trading view, looking at many different sites. We're going to be taking a look at liquidity. We're going to be taking a look at perps, spots, deltas. We're taking a look at whale orders. We're going to be taking a look at bookmap, open interest, and all the things that you need to be a successful crypto trader. Again, this video is going to be setting expectations, the do's and don'ts, all the stuff that you should know before you dip your toes in. Do me a favor, smash that thumbs up button, subscribe to the channel, turn on notifications. Plenty more videos like this coming. Hop in Discord, discord.gg/Alpha Aere. The first 100 active participants in this Discord will get free entry lifetime to any pay gated stuff that I do in the future. And trust me, the information I'm getting out should be hundreds of dollars a month. So hop on in, give me a try. If you hear jackhammers in this video, I'm sorry. I'm getting some construction done at the house right now. But let's get into it. I'm sure we all know who these guys are. I'm sure they're familiar to a lot of people, right? These open mouth crypto YouTubers showing their Lambos, living in Dubai, telling you what tokens to buy. We all know their backstory, right? And if you don't, they got a lot of them. This is generally speaking, but a lot of these guys, the vast majority of these guys got lucky in either 2017 or 2020, 2021 bull run. They picked a winner. These guys are literally the equivalent of hitting the lottery, of winning the Powerball jackpot. Are these guys. Now they're pretending to be expert traders who amassed a large following in the early days of crypto, right? 2017, 2018, amassed a large following. Then all these brands, all these exchanges, you know who they are, all these indicators that they sell for thousands of dollars went to them, are paying them money. All these projects that are launching these shit coins are paying them to push their coins. That's where they get their money. Don't let them fool you. Again, not all. They're not. I bet you none of these guys have ever shown their year-to-date P&L, have never shown their win rate, don't live trade, etc., etc. I'm not taking anything away from them. I'm just letting you know, oftentimes influencers steer you wrong. They push shit coins that all fall, that all they cash out on. They're all being paid to shill. That's just the way it is. Those are facts. Not all these guys, but the vast majority of them. You should never listen to an influencer. You should always learn yourself how to properly TA. There's no millionaire out there. There's no successful trader out there listening to anyone who makes open mouth thumbnails. They're not listening to anyone on crypto Twitter. They might use some smart people, and there are some smart people, some smart traders who actually live trade, like me. And I'm not saying listen to me, but learn. Take certain things from everyone and make your own strategy. So who am I? Well, my name is Ben. I am a professional stock trader. I have been trading now for about 10 years, professionally, really for the last 4 years. First few years of those 4 years, when I really went hard, were tough. I lost money, just as you should expect to lose money in your first couple of years as well. Since then, since learning from my mistakes, I'm winning. I am net positive on all my accounts. I have posted my cumulative P&L. This one was back in April. $400,000 on this particular account. There's my win rate right there. I also do lots of live trades. I also need to update this because I haven't updated it. I've on multiple exchanges, so it's tough to keep up with it all, but I do live trade. I just live traded a $3 million trade the other day. I post some of my wins. It's a double-edged sword, right? Because I don't want to make it look like this is easy. I've put in the work. I've ground. I've been doing this for years. I've learned. I have blown up accounts in the past, but $40,000, $50,000, $37,000, $25,000 wins. You know what I mean? $106,000 win, $242,000 win, 200%, 100%. You know what I mean? I can go on and on and on. And that is not to brag. That's what I don't want to do. I don't want to make it look like this is easy, because it's not. That is to show you that I do actually trade. I know what I'm doing. I don't make money from this. I have no affiliate links. I don't give a shit about that. I want to help people. I love the crypto space. I like trading stocks. It is a passion of mine. I'm passionate about it. I want to help people learn. I want more people to be able to quit their 9-to-5s. Like I said, more important than anything else, I want to grow a community. If I'm, like I said at the beginning of the video, if I'm sitting in front of my desk all day, it'd be nice to be able to talk to a bunch of people with the same interests, learn from each other, bounce ideas off of each other, not have a giant 20,000 man Discord where no one really knows each other and a bunch of rocket ships and memes. That's not what I'm looking for. I'm looking for authenticity, for people who really want to learn and grow, and really just to bounce ideas and learn from each other. So I'm going to pimp it one more time. Hop on in. Give me a shot. Discord.gg/Alpha Aere. So that's me, 40 years old, father of 7, married, house, cars, all that fun stuff. But it wasn't always that way. I had to grind to get here. I used to have a 9-to-5. It's been a while. I don't remember what it was like to be in the workforce. It's been a while. But I put in the work. I mean, I worked harder than 99% of people to get where I'm at. I never half-ass anything. If I'm in, I'm all in. That's it. It consumes me until I'm successful at it. And that's what I had to do. Yes, I blew up accounts at the beginning. No, it wasn't easy. Yes, it was a lot of late nights, long hours, learning every single thing. And that's what I hope to convey through these videos, through this series, give you a footing, a point to build off of, a foundation to take yourself to that next level. So that's enough about me. If you have any questions, if you want to join the community, because this is honestly what I'm doing all this for, is for the community to find like-minded individuals, to talk shop all day long. If I'm staring at a computer all day long, it'd be nice to do it with some other people who have the same or similar interests as me. Hop on in Discord, discord.gg/Alpha Aere. Like I said, the first 100 people are going to be grandfathered in for free to any type of pay gate I do in the future. So let's just get into the video. A lot of you guys know that crypto is my bread and butter. It's my pride and joy. I also trade stocks, Forex, etc., etc. This particular list here we're going to go over is for stocks. We're going to look at some crypto ones as well. You got to remember when we're looking at these that this is for stocks. Crypto is typically more extreme and less extreme depending on the statistic. It's important to understand the statistics behind day trading to make informed decisions. Check this out. Nearly 40% of day traders quit within 1 month. After 3 years, only 13% of day traders remain. This isn't very important, but you should note that 90.5% of day traders are male and 9.5% are female. Now, here's a little spoiler alert. Females are the better traders. Robinhood reported that one of its users earned over 30 million in a single day. It is possible, but it is rare. Here's some statistics for you. We're going to scoot on down. The 1% rule for day traders limits the risk on any given trade to no more than 1% of a trader's total account value. If you're YOLOing your whole account value, you are doing it wrong. A study showed that 88% of day traders use stop losses as part of their risk management strategy. Those 88% are doing it right. According to a poll by brokerage firm Charles Schwab, 70% of day traders reported that they had a trading plan in place. We will come back and talk about trading plans, but 45% of traders spend 1 to 2 hours each day trading. 14% spend more than 6 hours per day. In a survey by trading platform eToro, 89% of day traders use technical analysis. I don't know why someone would day trade without doing that, but apparently 11% do. They're probably the ones who don't win. 71% of day traders reported that they were always learning and seeking to improve their skills. This is 100% key, and we're going to talk about this more. 90% of day traders lose money consistently. Day trading is not a get-rich-quick scheme. You need to understand that. We just talked about after 3 years, only 13% of day traders remain. A great deal of knowledge, skill, and discipline is needed to be successful. Only 1% of day traders are predicted to be profitable after costs. Let's say that again for the people in the back. Only 1% of day traders are predicted to be profitable after costs. 72% suffered a net loss in 2019. The average individual loses money for 6 months before giving up. 97% of day traders consistently lose money. 40% again quit within a month. 80% quit in 3 years. Look at this. Female day traders are more successful than male day traders, with an average return of 43% compared to 41%. Women can be just as successful as men in the world of day trading, and they should not be overlooked or underestimated. The statistic serves as a reminder that gender should not be a barrier to success in the financial markets. You look at Crypto Twin, or look at all the guys talking about YOLO and degen plays. You don't see any women doing that. Day trading penny stocks has a success rate of about 1%. 17% of day traders can manage to earn minimum wage via day trading. That's not what we're here for. The average loss for 450-day trading clients at a brokerage firm in 2015 was about 10. This one's in euros, but 10. This was at like $12,000. Day traders are more likely to experience a 50% loss than a 50% gain. Only 3% of day traders can make consistent profits. Day traders who use margin or leverage suffer an average return of minus 0.5%. So the majority, almost all traders who use margin or leverage lose. Over 85% of active day traders fail in their first year due to poor risk management, including discipline. The expectations should be set that this is not easy. Statistically, factually, the vast majority of day traders fail. For crypto, 95% of traders lose money. Bitcoin is not immune to that. So 6 striking stats showing traders have it rough. 80% of all day traders quit within the first 2 years. A little different, but you get the picture. Among all day traders, nearly 40% trade for only 1 month. 13% continue to trade after 3 years. After 5 years, only 7% remain. The average individual investor underperforms the market index by 1.5%. That means an average investor just sitting on Bitcoin would make more money. Active traders underperform by 6.5% annually. Traders with up to a 10-year negative track record continue to trade. They're saying the last point suggests that day traders even continue to trade when they receive a negative signal regarding their ability. Astounding. Almost everybody loses. They lose fast. They underperform simple, mindless investments, and they could continue, and they do continue trading even when being unprofitable. Why, right? Everyone wants a Lambo. I think I've cemented the point here that this is not going to be easy. It is not a get-rich-quick scheme. And now we're going to move on to what it takes to be a professional trader, what it takes to be money. How do you separate yourself? How do you get yourself into that 1%? Your expectation should be that you are going to lose in the first year or two. Whatever money you throw at these magic internet coins or stocks, your expectation should be you are going to lose all of that money. So that is part of your risk management, is going in with the expectation that this money is going to be gone. Unless you are an anomaly, right? You are Rain Man and you are better than you are in that top 1%. You are better than 99% of traders. Here's the next expectation. You're going to have to work hard. You're going to have to work harder than 99% of everybody else in the world, period. Successful people are not gifted. They just work hard, then succeed on purpose. Success isn't always about greatness. It's about consistent hard work leads to success. Greatness will come. This coming from famous philosopher Dwayne "The Rock" Johnson. He's successful, very successful. He grinded his ass off. Vince Lombardi, the price of success is hard work, dedication to the job at hand, and the determination that whether we win or lose, we have applied the best of ourselves to the task at hand. Conrad Hilton, Hilton Hotels. Success seems to be connected with action. Successful people keep moving. They make mistakes, but they do not quit. Thomas Edison, the most certain way to succeed is always just to try one more time. This comes from Pele. Soccer player. Success is no accident. It is hard work, perseverance, learning, studying, sacrifice, and most of all, love of what you are doing and learning to do. This is one of my favorites from Maribel Morgan. Persistence is the twin sister of excellence. One is a matter of quality, the other a matter of time. And I'm going to end it on this one, not the video, but this segment. A dream does not become reality through magic. It doesn't just fall in your lap. I added that part. It takes sweat, determination, and hard work. This is coming from Colin Powell. All those quotes have one thing in common: hard work, sweat, perseverance, determination, discipline, failing, picking yourself back up, continuous learning, grinding. That is hustle. That is what it's going to take to be a day trader, good at day trading, in that top 1%. But guess what? That's what it takes to be successful in anything in life, period. If you want to be in that top 1%, that's what it's going to take, no matter what your field is, whether it's a doctor, a lawyer, whether you're a construction worker, whether you're building a deck like these guys out here are doing right now at my house. You might hear a jackhammer going on. That is what it's going to take. Slow and steady does not win the race. That is something that losers say. That is something that failures say. People who are going to be stagnant for the rest of their life. Well, the people who are grinding, who are persevering, who are putting in the work are going to pass them by. I've heard people say, set 10 minutes aside, set 15 minutes aside at the end of every day and learn something. That's not enough. Not enough when people like me are sitting in front of the computer for 8 hours a day. I'm not saying you have to do that, especially to start, but that 10, 15 minutes a day is not enough. Put some time aside. You're going to have to sacrifice. Any successful person makes sacrifices. You're going to have to figure it out. Sleep less. Unless you're just happy with doing what you're doing, then do you, boo-boo. But you're going to need to find the time every single day, a couple hours at night, staring at your phone in bed, sitting in front of the computer, putting that laptop on your lap and grinding away, learning the ins and outs of everything. And that's going to be in the next video and the videos that follow this. This is going to be a series, so there's going to be many videos. This is just an introduction video. Again, like I said, setting expectations. The next expectation is that this will take time. You're not going to have a Lambo in your first year if you don't already have one. You're not going to be a millionaire in your first year, or maybe never, right? I mean, statistically, people don't win. It's just the statistics. So when you Google it, and really when you dive in and read a lot of these articles, it's going to take time. It's going to take about 6-12 months. And really, I'm going to say it's going to be kind of that between the year 1 and year 2 where stuff starts clicking. And that's if you're putting in the work every single day. If you're actively learning and soaking up and digging in. So 6 to 12 months of hard work before you become consistent enough to implement your trading strategies and plan to start making monthly profits. As you're learning, you need to formulate a trading plan. You need to have a trading journal on your desk. You need to write your plan down on page 1. That is your 10 commandments of trading. Number 1 should be, I am not going to enter a position unless I have fully TA'd and fully understand the market on that day. As an example, right? Maybe you got some stuff before that. Maybe you got some stuff after that. My trading plan is going to be different than your trading plan. You need to develop your own plan, your own set of rules for entering trades, your own discipline, and you need to follow those. That is what I mean by starting your plan. You're going to build that plan over the next 6 to 12 months. As you're learning, you're going to add to the plan. You're going to crumple up that piece of paper, throw it away, and start over. But developing your own strategy and plan to take you into profit territory. And that is going to kind of piggyback everything else we talked about. It's going to take time. It's going to take discipline. Planning your trades piggybacks into the next little advice, the do's, right? Which are risk management. Manage your risks. You already know you're probably, unless you're just an anomaly, like I said, going to lose at first. So act accordingly. Plan your trades, like we said, develop your plan. And that's not something that you're going to have on day 1. It's going to be an evolving process, but things like stop losses, take profits, the 1% rule. So you should never put more than 1% of your capital on your trading account into a single trade. So if you have 10,000 in your account, your position in any given instrument should be no more than $100. If you put in $100 because you know you're going to lose, so put in $100. You should always trade real money, by the way, unless you're just learning an exchange or something. But you should know you need that emotion there. This is like, think of it as entertainment money, right? Budget it, $100 a month, whatever it is. $1. It may seem silly, but your goal is to learn at the beginning. It's not to be a millionaire, because statistically speaking, you're not going to be anyways. You're just going to lose money quicker the more money you use. Setting stop losses and take profits. We'll talk about this in later videos. I'm not going to make this video drawn on. How to more effectively set stop loss points. We're going to talk about that as well. Calculating your expected return. You can do that to diversify and hedge. Downside put. Some of this is for stocks, so we're not going to get too much into that. You need to do the work yourself. I can't hold your hand through this. You're not going to become a millionaire by watching this video series or any video series. You have to continuously learn. You need to Google. You need to read articles, read books. You need to fully engulf yourself. Learn every single little thing you can about TradingView, about a lot of these other sites we're going to go over in this series. Learn it. Learn one thing, two things, three things a day, and learn it extensively. If you're going to learn about RSI, Relative Strength Index, or you're going to learn about MACD or VWAP, learn everything you can about that specific indicator till you know everything, then move on to another one. You have to take the initiative, right? It's like the old saying, you can lead a horse to water, you can't make him drink, right? I can't make you drink. You have to do some of this for yourself. Next one, stop trying to get rich. Stop it. It's not going to happen. Statistically speaking, right? 1% of traders make it. You're not in that 1%. You're not in that 1% starting out, period. So stop trying to get rich. Stop betting the farm and everything. Stop with the degen plays. You're not going to get rich. Stop betting on meme coins. You're not going to get rich. Statistically speaking, you're not. Every once in a while, someone hits the lottery just like they do in real life. That is not the norm. Just learn. Throw $100, $200, whatever you're comfortable with, not a lot, and then practice the 1% rule. Try to build that account based off of that. Practice winning right now. That is your strategy. And I know some of these might seem boring at first, but as you get better, you can adjust your risk management. You can adjust the amount of money. You can adjust that as you get more experienced and better. As you learn to formulate a plan and stick to that plan and don't enter into trades unless your plan is followed, you're going to get better and better and better. You can up your risk level. The next one is, and I'm including myself in this, stop listening to influencers. Don't take a trade based off of what an influencer says. You can use that as like a signal, right? If I post something, you can say, hey, that looks good. Let me look into it myself. There's a lot of reasons behind that. Number one is I enter into a trade before I post it. I'm a trader first. I'm a YouTuber, Discorder, whatever second. So by the time I post something, it's already played out and I probably already entered into a trade. Now, granted, more often than not, you're going to be fine. But you need to TA this stuff yourself. Stop listening to other people. You need to listen to yourself and learn yourself. Let's talk about leverage. So we now know that out of every leverage player out there, the net is a loss. It's 5%, right? So the majority of people who use leverage lose. Don't use leverage at the beginning. Use one times. That's like using no times. That's using however much money you're putting up. So if it's $1, it's $1. But then that allows you to short it, right? So you can one time short something. If you have to get spicy, and I don't recommend this, just don't go over 5 times leverage, please. Leverage is for experienced people. You're going to lose your ass on leverage if you don't know what you're doing. And chances are, if you're watching this video, you probably don't know what you're doing. If you don't have a winning portfolio, you don't know what you're doing. So this goes to you. Stop using leverage. It's going to kill you, and it's going to drain your accounts faster. Use proper stop losses. We're not going to talk about how you set those stop losses in this video. I mean, you can do that research on your own. We are going to in some preceding video or succeeding videos to this, the videos that come out in this series. We're going to talk about stop losses, how to find entries. More importantly than that, you need to stick to your discipline. I don't know any traders out there who are trading from their phone to enter into position, right? I shouldn't say that. I do, but you shouldn't be. If you can't properly TA a coin, you shouldn't be. Once you get better and you can see certain things, sure, at first you need to sit down, properly tee it out, stick to your plan, develop your plan, and have the discipline that there will always be another trade. There will always be another trade. You don't have to hit every single one. Next is journal your trades. Have that notebook. Go get a 5-star notebook from Office Max or wherever, right? Target, Walmart, and journal every single trade you take. That way you can learn from your wins and learn from your losses. If you lose a trade, figure out what happened, what you didn't see that played out. Write it down, figure it out, treat it like a math problem, treat it like an equation. Learn from your losses, journal everything. I'm telling you, when you write it down, you know, it just, for me anyways, it helps. And for most people, you have to learn from your mistakes. You're not going to become a better anything if you don't learn from your mistakes. Journal it out, write it down, write your plan down, write everything down. Be careful with volatile assets. When you're first starting out, stick to Bitcoin. I'm going to tell you why, because number one, Bitcoin is 50% of the entire market cap of crypto. Whatever Bitcoin does, alts do. If you're charting an alt and you're entering into a position on an altcoin, for example, this isn't for the stock bros, but there's penny stocks, right? Or very volatile stocks as well. You are doing it wrong. You need to start with like the blue chip stocks or the blue chip cryptos, Bitcoin, for example, because alts follow Bitcoin, right? Whatever Bitcoin does, alts do. You're never going to find a day where Bitcoin's down 5%, then all altcoins are up 5%. It's not going to happen. It's just not going to happen. It's 50% of the market cap. Bitcoin is the papa, leading the pack. Start with Bitcoin, learn Bitcoin, then that transfers to anything. Once you learn TA, it transfers to anything. The TA is the same, whether it's on Tesla or Apple or Amazon or Bitcoin or Ethereum or Cardano. It's the fundamentals are the same. Do not get tunnel vision. If you don't see something on a 15-minute time frame, that's what you're on, go to 4-hour. You should be TAing all the time frames, right? Go to the daily, go to the weekly, go to the monthly. If you're still just not seeing anything, then maybe that's not the day for you. Maybe it's not the day for you. We can't win them all. We can't be 100% on our A game every single day, right? We can strive to be, but realistically, it's just not going to happen. Look at stocks. Go, you know, there's plenty of different stocks you can look at. There's plenty of different cryptos you can look at too for movement. Although with crypto, you do have to chart Bitcoin as well. Tunnel vision can apply to anything, right? If you're not seeing something, check out some different indicators, check out some different sites, which we're going to go over through this series. Just, you got to kind of expand your horizons. Don't get tunnel vision and sucked in to one time frame, one coin, one stock, one index, one whatever. So diversify, right? Next, use real money. Don't use these paper trading on TradingView or some of these fake paper trading sites out there. It's not the same. It's not even close to the same. You need that emotional feeling behind the trade. It is different. It is 100% different. Now, don't use a lot of money when you're starting out. Like I said, throw 100, 200. I don't know how much money you have, but whatever you're comfortable with. But go in knowing statistically, as we've been talking about, you're going to lose all that money, maybe several, maybe a bunch of times. This should be seen as entertainment money to start off with for the first 6 to 12 months. Learning. It's just like investing in a course. It's investing in yourself. You're not losing the money. You're investing in yourself. So that's mostly what I want to get across today. That this isn't going to be easy. It's going to take time. You're not going to be a millionaire right away. You need to put in the hard work. All the things I've covered. If you got a journal and you wrote down some of the stuff I said, you're on your way to becoming a better trader. The next video in this series, which I'll get out at some point this week, maybe tomorrow if I have time, will be on, step 1 of technical analysis, which is TradingView, setting up a blank TradingView account, what free indicators you should use. Some of you guys I know have probably already seen these videos. They're better than the last ones. I'm expanding on them. When I say last ones, some of you guys know what I'm talking about, but so these first few videos might sound like some repetitive stuff, but we're going to get there. I promise you it's going to happen quick. I'm going to get these pumped out pretty quick to get to some more advanced stuff, but you got to start somewhere. You got to have those expectations, practice risk management. I'm going to expand on all this stuff. It's going to be expanded upon in later videos. This was just an icebreaker to set expectations, to kind of pull everyone back, get everyone on the same page. But like, comment, subscribe, turn on those notifications, guys. Join us in Discord, discord.gg/Alpha Aere. And that, like I said, next video is going to be what indicators, how to set up hotkeys on TradingView. Lots of good information coming in the next video. Like I said, first few are going to be kind of basic, and then we're going to take off with it. But that's it. I appreciate you guys for watching. I don't really want to make these videos longer than 30 minutes because I know it loses some of your attention. Plus, hopefully you're pausing it, you're stopping it, checking out, re-looking at stuff. But take notes, do the work yourself. It's going to take time. The best advice I can give you, this is it. You have got to be better than 99% of everyone else, or you're not going to make it. Put in the work, set time aside, and realize it's going to take time. First couple of years, you're going to lose money. That's mainly what I wanted to get across here. And then throw a couple of do's and don'ts out there for you. There's going to be plenty more to come. I appreciate you guys. Air out.